Hello and welcome to Business Reporter's Knowledge Hub. I'm Alistair Greener. We hear about Brexit and the America First agenda of President Trump so often that probably most of us have built an immune response to fight the anxiety about the future of our nations and economies. But political and business debates are bubbling under the surface and we must prepare for an uncertain future. What are the most important steps that we must take today? Well, this is what we're going to discuss with Ricardo Evangelista from ActivTrades. Good morning.
Good morning, Alistair.
Now, we've seen over the recent years this neoliberal society, the whole concept crumbling and this increase in protectionism and isolationism. What's triggered all of this?
Well, there's more than one reason. I would say that if we look at a historical context, probably it starts around the late 60s, early 70s, when China starts making their workforce available for the rest of the world to use. So starts producing for the West to consume, offering low wages and fast turnaround. So that's one point. So that's one dynamic that starts there. So there's China that comes and the whole East, actually, Asia as well, other countries like Vietnam as well and Indonesia too. So the whole East starts interacting with the West in the more intense way and becoming part of the supply chain, producing, etc. So this creates the type of globalization that we talk about today. So that's one thing. But there's another pivotal point as well, which we can mark on the financial crisis of 2007, 2008. So that was a very marking moment in history. We saw that governments and central banks, especially in the Western world, have had to create new policies to deal with the situation. We saw that financial institutions were bailed out, but we also saw the other side of the coin to that, which was the cuts. So austerity, cuts in welfare, cuts in all sorts of social benefits in the UK, in Europe, in the US, in many countries. And together with that, coupled with that, we had the monetary policies. So all the major central banks started up programs of quantitative easing, very strong stimulus. So the net effect of that was that something that had started in the 70s, which led to a progressive loss of jobs to the East. Also, competition drove salaries down, was then compounded by that moment in 2008 when there was a major crisis and the social problems that were already existent were aggravated by that crisis. And the means to deal with those aggravated problems no longer existed. So people felt lost, people felt abandoned, betrayed as well, some. They looked into the monetary policies and thought that this is only benefiting the ones that are quite well off. We saw that the longest bull market in history has been running since then. So people feel a little bit betrayed, feel that their living standards are going down, there's no real wage growth. And of course, this played into the hands of populists. And populists started emerging soon after that and gathered momentum. And we see today across the world, from the Philippines, India, Turkey, Hungary, the UK with Brexit, in Italy, in the US to some extent, populist movements and forces are having a very, very strong impact and are gaining power in many cases. So I would say that The rise of populism and the rise of this populist politics probably comes from the historical context, and then it was aggravated by that moment in 2008.
It's interesting you just mentioned Brexit there, and actually Brexit is a little bit different in many senses because some people see Brexit as something that's been speared on by people who are wealthier in society rather than the other side. So what's their motivation?
Well, Brexit is a complex phenomena, and I would not think that I'm able to give you a full analysis or the most competent analysis on that, or the most valuable analysis on that. But I think that to try to explain Brexit from the angle you're approaching it, you have to look at the British society and the way it's structured. So traditionally in Britain, and correct me if I'm wrong, obviously I'm not British, traditionally in Britain there's a very strong class system that still remains in place, and there's an elite at the top. So part of this elite at the top probably has their own agenda, maybe driven by nostalgia, maybe driven by a new vision for the future of the country economically and socially. But it is true that part of this elite, part of the well-off, as you said, have sided with the forces that drive Brexit. It is true, yes.
And we'll come back to Brexit in a while. We've got lots to talk about there. But I want to come back to this protectionist attitude again. You know, maybe if we can try and get ourselves in the heads of those who support this sort of isolationist kind of mentality of tariffs and customs and so on. Why is it that they have this kind of view? What's in it for them? Why do they support it?
In politics, sometimes the ends justify the means. And I think much of the populist discourse and the populist agenda, the way it's projected out, is designed with the vote of the people in mind. So it's designed to gather votes. So as I mentioned just now, there are large segments of the population in the Western world that feel betrayed, that feel abandoned, feel that their lives are actually worse than their parents' lives were in the past. So it's the first time that the generation that comes after actually has the expectations are for a lower standard of living than the previous one. So that there's many people that are unhappy about this.
But is that betrayal, is that a reality or is that a perception?
Of course, it is a matter of perception because the world is moving fast. You know, technology is evolving. Industries that were typically very important, and you saw, for example, in the case of Britain, we had mining in the 80s, which was pretty much extinct. It's pretty much extinct now. Was a very important industry. Heavy industry as well. It pretty much disappeared in this country. So many people were not able to retrain, to move on, and the reasons for this are probably very complex and have to do with structural, the way education was managed, a number of reasons. But I think that people are probably right, yes. I mean, they genuinely feel abandoned. Large segments of the population genuinely feel abandoned. Whether they could have done something else to themselves to mitigate the effects of the changes and adapt and embrace these changes, it's another conversation. But yes, it's true that many people are suffering because of these changes.
And coming back to the protectionist mentality, could you maybe give us some examples of how that actually manifests itself today? You know, how do we see it?
A very good example is what's happening in the US today. So we have President Trump elected on the back of a populist agenda, America first, knowing that America is probably the country that benefited the most from globalization. It's a global power as well, so it's probably the only global military power. So it's a bit of a paradox that this surfaces in America in such a strong way. But his policies are a very good illustration of this protectionism mixed with of protectionism carried as a flag by populist movements.
And of course, that's politically motivated. What about the economic sense? Is there any case for protectionism being good for the economy?
There's very little evidence that protectionism, at the stage where we're at, where all the economies are intertwined. So if you look at the country's economy, more often than not, or in the Western world, in every single case, the country's economy stretches well beyond the physical borders of that country. So there's outsourcing of services, insourcing of services, there's very complex supply chains where you may be an exporter, but you have to import the raw materials or import parts. So it does not make sense. No, I mean, it may help in some cases as a short-term fix, but in my view and in the view of many analysts and thinkers, it's not something that makes sense.
So what are the pitfalls? What are the potential consequences of this isolationist kind of mentality?
If we look at history, we look at the Great Depression of 1929 and the 1930s. Many countries back then adopted protectionist policies to deal with the problems they were facing, and the only effect that had was to aggravate an already complicated situation, and that was had a multiplying effect. And today we talk about the Great Depression. So
let's take it from an organisational point of view, and let's say someone's running an organisation that is reliant upon these open borders. You know, we hear this term frictionless trade and so on. For an organisation that's looking for that, what are the sort of potential pitfalls that they need to be aware of in that circumstance?
Well, the inability to serve clients. So we have the case of the UK here, where we're sitting in Canary Wharf, financial services all around us. Financial services, I think, account for about 10% of the tax revenue in this country, and are heavily involved in relations with other countries. So you have banks here that have clients all over Europe, and if we were to have a no-deal scenario, those passporting rights would be lost overnight on the 29th of March, so meaning they would be unable to serve clients or to get new business from Europe. And in many cases, Europe represents most of the business for these organizations. So that's a big pitfall. That's a big danger, a big dark cloud in the horizon for companies. But also we're talking about manufacturers who may be unable to get the products they need at a competitive price, and therefore their end product, what they're going to send out afterwards, will no longer be competitive in terms of price. We have farmers that may no longer be able to recruit the staff they need to pick fruit, for example. We have the hotel and catering industry who may not be able to recruit the staff they need. And already there's talks of difficulties in some cases to find staff. So these are all consequences of protectionism, of closing borders. We live in the world where all the problems are global. You look at inequality; it's a global problem. As long as there's one tax haven in the world, there, people with the capital will be able to hide it there. We talk about global warming. It's a global problem. One country can stop emissions, but if the other carries on, the problem will not be dealt with. We talk about mass migration. All of these are global problems that require global solutions. And I think that closing borders and looking at protectionism and nationalism is probably not helpful at all in the world we live in.
Looking at it from an investor's perspective, what are the kind of assets that they should be looking out for in these turbulent times?
The typical assets that investors look at during times of trouble or more complicated and challenging times will be the traditional safe haven assets. So gold, the safe haven per excellence. And we saw after 2008 how gold went from $900, I think it was, to almost double that. And interestingly, the US dollar has recently been looked at and seen as a safe haven as well, especially since the trade tensions between the US and China gathered pace, and the rhetoric became a little bit more assertive from both sides, especially from the American side. We saw that the dollar was sought after, and of course we have the Japanese yen, which is also traditionally seen as a safe haven.
Now, again, looking at people who might suggest that this is just all about, short-term turbulence caused by new political ideals and things changing, but actually after a while it settles down and we'll have a new status quo develop after a certain period of time. So are you optimistic about that analysis, about the future?
It's very difficult to predict what's going to happen in the future. But my analysis in this case would be that the current situation, the international turbulence surrounding trading, at this moment is mainly generated by the disputes between the US and China. Okay, so this is the main focus of disputes, the main point for turbulence. The whole process was triggered by President Trump and his administration. There will be an election coming up in 2 years in the US. President Trump has pretty much played all his cards already to boost the economy. So we had the fiscal stimulus. He's done pretty much everything he can do. And most analysts look into 2019 and 2020 and predict a slowdown in the growth of the American economy and maybe even a mild recession towards 2020. This will not be good news for a president that will be seeking re-election in 2020. Mainly when we're talking about a president that uses the success of the economy as his main flag. So I can see that there will be distracting maneuvers, there will be more aggressive rhetorics, and I can see that protectionism and nationalism will once again be used as a tool here. So I'm not so optimistic.
Let's look at the UK again and come back to the topic of Brexit. One of the things that we've seen with Brexit, with the negotiations, the drip feeding of news that's been coming out of Brussels and out of the Houses of Parliament, is the effect on the sterling currency. And actually, on one hand, that's had a major effect. We saw that the up and down motion of that currency. Are there other factors that are really influencing sterling at the moment?
The policies of the Bank of England are the main factor, but of course those are determined by the context within which it operates. So if we look at unemployment is very important, GDP growth is very important, the current account is important, inflation is very, very important. But one must not forget that all of these factors depend on the way Britain, to some extent, some more, some less, but depend on the way Britain interacts with the rest of the world, because Britain the UK is a global economy. It's got many companies that are global operators, and the UK is highly sensitive to a complete change of scenario where all of a sudden it becomes a country that closes borders and has to negotiate everything again. So obviously all of these factors, unemployment, inflation, GDP growth, will determine the policies of the Bank of England. But we're already seeing that the Bank of England, that perhaps should have raised interest rates at a faster pace than it's raised once. Since it last lowered them. So the Bank of England is not being as hawkish as it would otherwise be, because there's the big threat of what Brexit can cause to the economy. So it looks at all these other factors I named, but all these factors are to some extent, and in some cases a very large extent, likely to be impacted by whatever the outcome of Brexit will be.
Well, that's the interesting thing, isn't it? Because we have this valuation of the currency at the moment, and Brexit hasn't even happened.
Yes.
So what do you think the people who are valuing sterling at the moment, what kind of Brexit are they anticipating to give the value of sterling as it is at the moment?
Well, we saw that just before Brexit happened. Sterling was trading at, what, $1.45, something like that, $1.45. After Brexit, it went down to 120. At the moment, it is trading at around 126, 125. So if there was to be a no-deal scenario, I could see sterling going down to 110, for example. If there is a good deal, what is perceived by the markets as a good deal, I could see it going up to 140 again, 145. At the moment, I think the markets and investors are very cautious, and we see that every time there is a significant development, there is a significant movement in the Forex markets, and sterling moves against other currencies. We saw every time there were news, say for example, looking back, Boris Johnson resigned. Theresa May was defeated in Parliament on 3 fronts in the same day. Every time something significant happens, the market repositions itself. So at the moment, I would say that the markets are probably optimistic but very cautious as well. So the worst case scenario is not priced in, but the best case scenario is also not priced in. So we're somewhere halfway.
Now, interesting enough, when we look back at 2008, the fall of sterling actually had a slight cushioning in effect, and there are those, who are exporting and so on, who actually benefit from a lower pound. I mean, is that the sort of pattern that we're seeing being repeated today?
I don't believe that a weak pound is necessarily good for the country's economy. I think a lower pound means more expensive imports, and that can trigger inflation. Triggering inflation when growth is weak is very dangerous. So because if inflation, as you know, if inflation starts rising, the Bank of England will have to control it by raising interest rates, and higher interest rates don't help growth. So if you have high inflation and low growth, which is a scenario that you would probably encounter on a no-deal Brexit, that could be quite difficult to manage. So I don't think a lower pound at this stage is something that people should be aiming for.
But let's look at those organisations that have benefited, the exporters over the last 15 months who have benefited from a lower pound, which I understand you say isn't to everybody's benefit, but for their benefit it has been. Let's say, fast forwarding a little bit to where maybe we do crash out without a deal, or something happens where all of a sudden we have these new tariffs and so on being added to the cost. What sort of impact will that have on the exporters, and how should they prepare for that scenario?
The impact on the exporters will start on the price they'll be paying for the raw materials that they will have to import, and the possible tariffs they will have to pay on those two. At the moment, exporters, I think the EU accounts for over 40% of the UK's exports. I think the costs that will increase on the importing of raw material side will probably offset any benefits that a weaker pound can bring in terms of exports. I think the impact on manufacturers in this country will be quite high, and I don't think that a weaker pound will solve the problem.
And what about investors? We couldn't be in much more turbulent times. So for any investor to make any form of decision about their investments is very, very hard. So what kind of attitude do you think that they should have? How can they hedge against this huge level of volatility?
Once again, looking into safe haven assets. So there's assets that typically gain in value during times of trouble, like gold, for example. But also, nowadays it's quite easy for investors to short assets that they think will lose in value. So that is still a possibility through CFDs, for example. investors can bet against equities or indices, and it's quite easy to do. I'm talking about retail investors, of course, and then there's the safe haven assets, which are also normally good assets that performing very well during more turbulent times.
Well, only time will tell. I mean, who knows what's going to happen, and it's turbulent for everybody involved, whether you're an investor, whether you're an organisation, but we'll just have to wait and see what happens over the next year, 18 months or more. It's been fascinating talking to you, Ricardo Evangelista from ActivTrades. Thank you very much indeed.
Thank you, Alistair.